Are mega cap tech stocks finished? And if so, is the bull market in stocks over? Or are we about to see money rotate into other sectors of the market? That's what I'm going to discuss in this video. But before we get to the good stuff, I got to introduce myself for anyone who's new to the channel. My name is Justin Spittler. I'm a professional trader. And on this channel, I regularly discuss different sectors and industries and trade setups that have my eye. I also share insights and ideas on Twitter. This is my Twitter handle here. It's the same as the YouTube channel, so it's JSpit Trade, so you can find me over there if you'd like. I also have an e-letter at Risk Hedge. It's a little logo over here. And each week I share one of my top trade ideas in a free e-letter, so you can check that out too if you'd like. But enough of that stuff. Let's get into the good stuff. Let's talk stocks. So that's the reason you're all here. And in this video, we're going to dive into the idea of market rotation or sector rotation. So this is a concept that traders and investors are familiar with. It's basically the idea that during bull markets, when leading industries start to take a breather, it's very healthy and normal for money to rotate into lagging sectors. And I think that's something we're about to see in the market right now. But the reason I think we're about to see rotation into other areas of the market is because this run in tech stocks, particularly mega cap tech stocks, has gotten quite extended. So we look at the New York Stock Exchange FANG index, which invests in companies like Nvidia, Apple, Microsoft, Google. Tesla is also in there, and I want to say AMD. There's a few others, but this index has rallied 80% since November. And you can see it's broken out of this space. And then this week, after having, what is that, 1, 2, 3, 4, 5, 6 green candles in a row, we're starting the week off red. So we're starting to see probably our first signs of a potential exhaustion from this huge move up. So I think it warrants caution. If you're long these mega cap tech stocks, and just tech stocks in general have been on a tremendous run lately. So I'm thinking, based off of everything I'm seeing in the market, that these stocks will likely see at least a pause in, if not some decent pullbacks in some of these names, some of the more extended names in particular, because it's not just the mega cap tech stocks that have done well. The entire tech sector has been lifted up by just the performance of those huge, really important companies. So you can see that clearly. We look at XLK here. We can see after breaking this downtrend, it just went on an absolute tear. It has just been really not only leading the market higher, but pulling the entire market higher, just because of the kinds of companies that are in XLK and the fact that XLK is the biggest sector in the S&P 500. But similar to what we're seeing in the FANG index, we're starting to see early signs of exhaustion here. Last week we closed down red, which we didn't close down that much, that deep in the red, but we're starting to see some continuation this week. And after breaking out and flipping this level down here, we're pretty extended. So I'm thinking that we'll see a pullback in a lot of these extended tech names. But it's not just the mega cap tech names. It's also, I also think we could see a pullback in semiconductors, which have really also participated in the big run up. They've been right there with the mega cap tech stock. So we look at SMH here. We could see came out of this bottoming pattern, broke out, came back down, tested this level. After testing this level, just rocketed higher. And this was really driven by huge moves in Nvidia, including Nvidia's earnings report, which really ignited this industry-wide rally, and also just the general excitement right now around artificial intelligence. Everyone wants to get a piece of this mega trend. So the great way to do that is with these semiconductor stocks. So we could see here, similar to what we saw in XLK, this closed red last week, and we're having some continuation early into this week. So I think with a lot of these, high-flying semiconductor stocks, you just need to be aware that pullbacks and at the very least consolidation would be not only normal but perfectly healthy. So that's definitely something to watch. But when I say that we should expect pullbacks or consolidation within semis, or when I also say that just as it relates to tech in general, I think you still, if you are trading or are investing in names within that sector or industry, what you need to be mindful of is you also just have to focus on the individual chart of the stocks you're trading. So For example, this is a name that I recommended in my e-letter recently, and the reason I recommended this semiconductor name Clack is because while it did have this big breakout of the space, it came back down last week and tested this level. So we have a breakout retest. So that basically means that when we bought the stock, we bought it at support. So that is just something you need to be mindful of if you're going to, go out and invest in individual semiconductor names. I don't mean that, the entire sector is about to come crashing down and pull back 10 or 15%. There are a lot of individual semiconductor names that still look really good here. So you just have to analyze it on a case by case basis or a chart by chart basis. For example, Anto is just a very similar setup to what we're seeing in Clack. You can see it emerged out of this huge base here. Last week came back down, retested this key level here, and then buyers are stepping in this week. So that's just another example of a stock that, while we could see a broader pullback in semiconductor stocks, there are still some companies that I think could have potentially have some good upside going forward. One last name I want to share, and since we're on the topic of semis, is COHO. This is a name I've shared before. I still like this name here because, unlike a lot of semis, which have these huge run-ups and are quite extended, this is still in its base building process right here. We can see that it has this massive inverse head and shoulders pattern, and it hasn't really broken out of it yet. So just something to be mindful of if you still own tech stocks or thinking about trading tech stocks. There are still some good setups out there. But with that being said, I also think this is a point in time in the market, which is how extended XLK is and how extended a lot of these FANG stocks are, that we could see rotation into other areas of the market. And one area in particular that has my attention is industrial. So this week, or over the past week, the strongest performing sectors have been energy, materials, and industrials. And I think it's definitely possible that we could see rotation to all three of those sectors, but I'm just going to focus on industrials here because I just like the price action I'm seeing out of XLI the best. So we look at XLI, we can see that it bottomed back in September of last year, had this huge run up, and then really just traded sideways for several months here and just built out this base. And I think it is really just storing up energy for its next move higher. And this had the potential, more than one opportunity to roll over here and to head lower, but it reclaimed its 10 and 30-week moving averages, and now we're starting to break out to the upside. And so I think this is definitely an area of the market that I'm watching very closely for some potential rotation into. And it's not just because of what I'm seeing in XLI, which is looking pretty constructive. When I scan and look at a lot of individual industrial stocks, I'm starting to see some really, really nice setups here. So this is a name I actually took today, our Cosa. I'm not exactly even sure what they do, but I just bought it because I really just like the group strength that I'm starting to see. I just love this individual setup. So we can see huge base here, has a big volume coming here. We broke out, and then another breakout retest here. You had this initial breakout, came back, and just kind of stored up some energy here, and now we're starting to really rocket and move off that base level. So this is a name I really like. That's Cosa. Another name that has my attention is GWW. So I took off the moving averages for a second just so you could see this. So the thing that stood out for me when I looked at this chart is just a strong uptrend here. You could see that it actually, unlike most stocks which were topping out in late 2021, this actually put in a bottom. So it's sort of doing its own thing, marching to the beat of its own drum, which I like. And we can see here that after rallying off of that level in late 2021, we came up here, pulled back, built up this bull flag, broke out of that. Then we had a little consolidation wedge here. We broke out of that, and now I think we're about to see the next breakup in GWW because we have this mini base forming up here. So overall, just really, really constructive action. Just a nice, really beautiful uptrend. So I just like that name a lot. Another name I want to look at is Rockwell Automation, ticker ROC. So what I like about this is this stock bottomed back in June of last year, had this big base, broke out here, and then just came back, had a pullback here, and was really just built out a bull flag, or if you want to call this a cup and handle, doesn't really matter. But it's overall constructive basing action while within the context of an uptrend. I just really find this to be, really nice constructive action. We're above the 10 and 30 week moving average. So overall in the weekly, this is one that I really, really like here. But before I sign off, I want to point out something important. So for much of this video, I've been discussing rotation in the context of money rotating from sector to sector, industry to industry. But we can also see a different kind of rotation, and that is rotation from large cap to small caps. And that's something that I think could be brewing right now. So we look at IWM, this is Russell 2000 ETF. We can see that after topping out in late 2021 here, we came back down into this key support level here, and we've just been trading in this range, and just really building out a base here as how I'm starting to see it. Buyers have held this key level several times. A lot of bears were worried that IWM and small caps would roll over and drag the entire market down with it, but I think that argument is getting weaker by the day, because we can see the support level has just been holding. And now the past few weeks, while other areas of the market have, are reaching potential levels of exhaustion or extended, we've had two really, really strong weeks in IWM here. So there's overall pretty constructive action. But another reason I think we could see some rotation out of large caps into small caps is when I look at the IWM versus SPY chart. So this is a relative chart. So basically, when this line is, when this chart's going up, it means that small caps are outperforming large caps. So we can see that, since late 2021 or early 2021 rather, we've been the small caps have been underperforming. We pulled back into this key support level that dates all the way back to the COVID crash, and we're starting to see some buyers step in here. We're starting to see some signs of trend reversal. See this big green candle here, and this just means that small caps are starting to outperform. So this is definitely a trend to keep an eye on. If we could, if this chart can reclaim this level, so we're sort of, potentially coming up against some resistance here. If we can break through that and head higher, then we could enter a period of weeks or months where small caps outperform large caps and really just outperform the overall market. So that's something to definitely keep in mind. But yeah, that's it for today. I hope you found this discussion of rotation informative. Until next time.